Hello all, you've probably seen the market is crashing today. The VIX is up to 50 already and the market's still got a few hours to open. Last night it was at 24. I've been trading for 20 years. I've protected my accounts already today and I can show you how to do the same. Okay, let's take a look at some key charts here. The blue line is a 5-day moving average, exponential moving average. I use that just to smooth things out. Look at this move in the VIX. This is a volatility index. Absolutely bonkers. We haven't seen anything like this since COVID. So this is a serious, pretty serious, very serious market day. If we look at the futures, they're actually, they're down a lot, like 3% for the S&P and the NASDAQ down 4.6%. Given that VIX move, I actually thought they'd be down more, but they're still massive moves. Here's the Russell. Goodness, down 5%. Way before the open. Currently we've got about 2 hours to go before the open. Just absolutely nuts. The Japanese yen is in total free fall. Look at that. It's been in free fall for a couple of weeks, but today is just taking the cake. Look at crypto. Crypto's fallen out of bed. Of course, a Bitcoin. Wow. How often do you see a down move like that? You don't. That's just immense. Down 11% today. So now what can you do about it? So I've traded a lot. I've been in these kind of situations before. I've been in the... I wasn't born yesterday. I went through the GFC. I went through COVID. I went through the 2018 crash at the end in December 2018. That was pretty ugly, a bit short. But I'll tell you what I've done today. That's the best way to go about it. So firstly, I looked at the sizes of my systems, how big they should be based on my mean variance optimization, how I optimize my different systems together. I've updated all the volatilities for them, my volatility estimates, and I actually use regressions for those, but you can just use recent volatility to estimate the volatility of your different systems. I've got the sizes based on that and the correlations. I've got the sizes of my systems, what they should be. And then I've shorted futures. So for shorted futures to make sure my sizing is correct. So for systems that kind of similar to the S&P 500, I've shorted S&P futures. I've got a very tech heavy stock system. For that, I've shorted NASDAQ futures because the correlation would be better with that portfolio. And then I've also gone long VIX futures, volatility futures, but not near-term ones because they're obviously extremely volatile. But you can go several months out. So I've gone long December and January VIX futures. So they don't move as much as the front month, but that's fine. If things get much, much worse, for example, if a big war does break out in the Middle East, they will go up. The December and January VIX futures will go up massively as well, not just the front month. And so that will give me actually some upside. It's a bit late to do this now, but about a month ago, I bought 20% out of the money S&P puts to cover the whole size of my portfolio. And they're well in the money now. And that's something I only recently started doing, but every 2 months I'm going to be rolling 20% out of the money S&P puts for situations like this. So luckily that I just started that system a couple of months ago, and it's playing out. The problem with buying out of the money puts on an ongoing basis is that you're continuously going to lose money. So almost all of the time they're going to expire out of the money, and you're going to have a drain on your account of maybe 2% per year, depending on how far out of the money you buy the puts. But if the proverbial SHIT really hits the fan, then I'm glad I did. And the reason why I bought out of the money puts 2 months ago was because of my concerns around what's happening in the Middle East, and also with Russia and potentially with Taiwan. So if things do really kick off, I'm actually happy to lose on a consistent basis 2% a year for even 10, 20, 30 years to protect my portfolio in case things get really bad. And so that's actually working in this case. For really volatile stuff, I just sell out completely. So I've sold all my crypto, sold most of it about 2 days ago, but another bunch I still had this morning, and I just got rid of them. Some of them I generally put in limit orders, but they weren't, because the market was falling so much. My orders weren't getting filled, so I just hit the bid. So just dump them basically. Most of them were pretty liquid, so the bid-ask spread wasn't too wide. So at the moment, I've got two main accounts, well, actually three main accounts. For one of them, I've sold, put in limit orders to sell everything, so they might not all fill, but I'm fine if they don't. The other one, I've got hedged very well with futures now and with the S&P puts I mentioned. And with the third account, I've got some futures short to hedge some of that, but I've also got those long volatility index futures I talked about, so VX futures. So actually they'll be well on the money already because I put them on a couple of hours ago and volatility's gone up since then. I haven't checked them, but they'll be well on the money now. So already profitable. So if you're just looking at this video now and it's halfway through the trading day, or it might be another day, it might be in a few months' time and we have a similar crash, the main thing to do is to look at the sizes of your system, or the following things. Look at the sizes of your systems, and if they're too big, short futures immediately. Just hit the bid, just short them. So either mini S&P futures, mini Russell futures, or mini NASDAQ futures. And probably in Europe, there's some European index future you can short if your portfolio is generally European. If it's a big crash, you could, well, I say take a punt, but it's actually a system I've got that I've tested, so it's not just a random guess. But you could go long some, a few months hence, like not current volatility futures because they're extremely volatile. They move very quickly up and down. But I'd go maybe 3 or 4 months or 5 months out and buy some volatility futures. But of course, you could lose on those too. If things calm down, then they'll lose a bit of money. But that's the way you can make money if things get worse. And as I say, they're already in the money for me after a few hours. But I actually hope that they do end up losing money because that means everything would have calmed down, and then all my stocks and other positions would have gone up. Bonds. I haven't talked about bonds yet. So let's look at bonds. They've gone up a lot. You can see here, this is the TLT, the most liquid 20-year Treasury bond ETF, and that's because rates are going to come down. So the FedWatch tool, which I'll show you here, on the CME group. So 99.5% for September. So based on Fed funds futures, the market thinks there's a 99.5% chance that there'll be a 50-point rate cut in September. So the current target rate's 525 to 550, and here we're showing a 99.5% chance of 475 to 500. And then November, even lower. Yeah, there we go. So there's a 23% chance, according to the market, that there's going to be a 150-point cut by December. So with rates expected to come down, bonds are going through the roof because they move inversely. So if you're short bonds, or actually which I was this morning, I have a system that shorts bonds at the start of each month just for a few days because there's an historical pattern there that generally works pretty well. So I found myself losing pretty badly on that, so I just dumped that. Normally, I would never, ever break my system rules, but here I know rates are coming down, and so I've got no reason to be short. Everyone knows rates are going to come down now, so I've got no reason to be short bonds. That's just dumb, right? So hopefully that helps. Good luck today, and good luck over the next few days. Basically, protect yourself. Don't focus on making money as the first thing. The first thing is to protect yourself, and then once things have sorted out in your accounts and you're happy with your risk, and in interactive brokers, you can actually look at the risk navigator to get an idea of how what your profitability will be like and what your account position will be like for different moves in the overall stock market. But once you're happy that you've protected your accounts, then you could look for ways to make money. But protect your accounts first. So if you thought this video was helpful, please subscribe, and I've also got a Patreon channel. The link's down below with more information. Thank you.